Hello, DGI Crab community. It is Colby, the DGI Crab, coming to you on a Saturday with some more good news. In terms of dividend stocks, we've got a couple more increases among the 60 stocks that this channel focuses on. If you're new here, this channel covers 60 of the highest quality dividend growth stocks, and I've split those 60 into four separate tiers, 1 through 4, based on the age of the investor and how they should be building their passive income portfolio, with tier 1 for the young folks looking for fast growing dividend compounders, up to tier 4 for the current income seekers that are looking for high yield very quickly. And here we've got a couple of increases from the tech sector, which is always nice to see. Dividend growth investors typically haven't been super heavy invested in the tech sector because they just don't pay out the consistent dividends the way that your energy and your utilities and your consumer staples do. But it's always great to see when you've got a couple like this in your portfolio. You're going to get some more passive income for doing absolutely nothing but holding shares of stock in a couple of blue chip companies. Now, I'm not a financial advisor, so anything you hear on this channel, don't take it as direct financial advice, but I do like to share my strategies, what I'm doing, and what gets me excited about what I think is the best way to build up a passive income stream. Dividend growth stocks. So here we go, guys. We've got a couple of increases here, one from Microsoft, the other from Texas Instruments. And we're going to take a look at these and kind of see how everything shakes out here, if they have met expectations. So first off, let's talk about Microsoft here. So Microsoft just raised their quarterly dividend from 75 cents to 83 cents per share, which is good for a 10.7% increase, which is right in line with what they have been doing now for years. If we take a look at Microsoft here on Seeking Alpha, they don't have the annual payout updated just yet, so this is going to be jumping up here, obviously, from $3 to, let's see, what is that, $3.32. It's going to mark the 20th year that Microsoft has increased the dividend. They have a 5-year growth rate of 10.27%, so they're about a 0.5% higher on this increase. This is just basically what Microsoft has been doing for a while now. Their payout ratio at just 25%. They could certainly do larger dividend increases than this, but you know what? I'm happy with double-digit 10% or higher dividend increases, especially ones that are as safe and predictable as this one. Microsoft, not the highest yielding stock, but this incredible amount of consistency on the dividend just makes Microsoft such a great stock for people 30 and under, especially, to load the boat on while they have plenty of time in the market to continue to get those 10 to 11% dividend increases. Not to mention just amazing share price growth. If we look here year to date, Microsoft is up 15.75% on the year, up 35.7% over the last year, and over the last 5, up 212%. Microsoft, one of the greatest growth stocks out there. No one's going to argue with that. Some people might argue whether or not it's a great dividend stock. I think it's one of the absolute best. I get that the yield is low starting out, but looking for a stock that's going to give you double-digit dividend increases year over year, Microsoft is one of the absolute safest bets out there. There is no question about that. And while I'm not a big proponent of selling stocks and running off with profits, I like to let my runners run. If you load up on a bunch of Microsoft when you're young and then you get into your retirement years, or even if you just build up a nice portfolio and you're in your mid 40s to early 50s and you're pretty close to having enough passive dividend income to live comfortably off of, this is a stock where when it goes on a hot streak run, which is pretty consistent, it's almost always on a hot streak, it feels. This is certainly one where you could start just gradually, slowly selling off shares and living off of the proceeds and leaving your other higher yielding stocks set on drip. Or you could take that money and plow it into stuff that has a higher yield immediately. But I'll tell you what, this is going to be one of those stocks that is hard to sell at any point in time for me. One of my biggest mistakes as a dividend growth stock investor was selling off a decent portion of Microsoft shares when I thought that they were on a really, really hot run and just getting massively overpriced. Thought I could sell off those shares, move that money somewhere else, and then start loading up on Microsoft again at a more convenient time. And all the stinking thing does is it just goes up. So I've been kicking myself over that for a few years now. Should have held on to those shares. I'm not going to make that mistake again. The Microsoft I've got in my portfolio is just going to sit pretty there for quite a while. Now moving on to Texas Instruments. So this one a little bittersweet. So Texas Instruments just did a 5% dividend increase. Now, Texas Instruments is in the Tier 2 category for the 31 to 41-year-old investors. They've gone up from $1.30 to $1.36 per quarter per share. Now, a 5% dividend increase would be just fine for me in the Tier 3 or the Tier 4 as you're starting to get older. I'd like to see more than 5% from a Tier 2 stock, but let's just take a quick peek here at Texas Instruments, look under the hood here a little bit, and I think I can kind of shed some light on this and let you know why that happened. So if we look at their dividend stats here, Texas Instruments has a 5-year growth streak of 11%, so pretty similar to Microsoft. They have an 18-year dividend growth streak, which is going to increase now to 19 years. But that Texas Instruments payout ratio continues to creep higher. And that's definitely a concern. I don't like to see this 90% payout ratio. Now, management clearly thinks that despite the higher payout ratio, they have room to do a dividend increase of 5%. But man, with the payout ratio that high, I wouldn't want to jeopardize that dividend growth streak if I were part of that management team, because a 5% increase is kind of a bummer for a stock like this. So if you're going to throw out kind of a disappointing dividend increase, I'm almost of the opinion just go full out disappointment and just do a really small one. But hey, let's take a look back at the growth history here. You can see that they really aggressively were increasing that dividend for quite a while, 11%, 13, 15, and then some here in the 20% range. Just a powerhouse when it comes to dividend growth there for a while. This streak began back in 2006, and they have just been rocking and rolling up until last year, 2023. They did a 7% increase. And now this year with a 5% increase, maybe those are starting to slow down just a little bit. Texas Instruments is kind of part of that semiconductor industry, and that's absolutely been a super hot industry for the past year and a half, maybe even more than that. All of those stocks are really way up. Everything from Broadcom to Qualcomm's having a really great year of growth. And the share price growth on Texas Instruments certainly has been way up. If we look here at the numbers here over the past year, it's up 25%. Year to date, up 19%. Over the past 5 years, up 60%. So certainly a lot of share price appreciation, good solid dividend growth. I am going to keep an eye on that high payout ratio. I hope that they get that under control, because I'd hate to see that streak of theirs end as they're starting to get within striking distance of being a dividend aristocrat. They've just got a few more years to go before they hit that 25 consecutive year mark. I think management is probably going to try their best to make sure that they hit that. So at this point, I'm not very fearful of a dividend cut. But again, until that payout ratio gets under control, maybe these smaller single-digit increases are going to be more the norm than the aberration. So Stay tuned on that. But in the meantime, hey, I'll take the 5% increase for my shares. I'm not doing any work here to get that pay raise except the work that I put in to come up with the capital to invest in the TXN shares in the first place. That's what it's all about, gang. Buying the passive income so you can retire early and live off of those dividends for the rest of your life comfortably and not have to sell any shares unless you just want to, because we want to have enough dividend income coming through where we're not worried about fluctuations in the market. We're not worried about stuff going up and down and news and this and that. We won't even have to track it in retirement if we do this correctly. We're just going to get nice raises in our passive income year over year, even when we're not reinvesting our dividends anymore and we're cashing all those out and living off of them. Man, that's going to be a sweet, sweet day when that happens. Some of you out there listening are probably a lot closer to that than me. Some of you are probably just starting out in your journey and just absorbing a bunch of information as you're learning how to do this. And if you're here making this channel part of that education, I'm honored to have you here. So, hey, everybody, email me any questions that you have at dgicrab@yahoo.com. I am running super behind on doing video responses to some questions that have come through from viewers. So if you're waiting on me for that, guys, just hang in there. I haven't forgotten about you. I've got a queue of stuff that I need to be working on this weekend. So I'm going to be doing some work on that between now and Monday. So stay tuned for some viewer response videos and a lot more good content planned. And as always, I have links in the description below to a video on each of the 4 tiers where I break down the stocks in each category, why they're there, why I like them, and why I think they're the most appropriate for that particular age range. So, hey, take your age, watch the video below, and take a look at what I think are the best quality dividend growth stocks to invest in if you are a dividend income investor looking to build that passive income. Let's go, baby. Let's get the passive income. It's very exciting, you guys. This is my very favorite way to invest. I hope it is yours too. Thanks for making me a part of your weekend. And hey, I'll see you all on the next one. All right. Have a great weekend, everybody.